Hey everyone, welcome to today's lesson. We're going to do it in a different way today. You tell me if you like it. So we're going to look at a very simple and short topic called commercial arithmetic. So this is mathematics centered on business. Okay, for those who are doing commerce, I'm sure you'll discover that you're familiar with some of the concepts here. Okay, so we're going to start with some basic terms. Okay, so first, commercial arithmetic, the one that comes in the new syllabus, is centered on companies. Okay, they talk about profits. Okay, they talk about shares. Okay, so let me give you a scenario. Let me give you a scenario that is centered on how companies work. Okay, so when a company is opened, for it to have capital, it's going to advertise what are called shares. Okay, so they are going to advertise shares. Let me check if you are able to see clear. Okay, it's okay. So they are going to advertise what are called shares. Okay, so when they advertise these shares in Zambia, it is done at Osaka Stock Exchange. If you buy these shares, then you are going to have ownership, a portion of ownership of that company. Okay, and you'll be benefiting from the profit that the company makes. Okay, so these shares, when they are advertised, for you to buy them, there is a price which is called, just a minute. Yeah, so there's a price which is called nominal price. Okay, so this nominal price is the original or the actual price companies advertise their shares at. Okay, so there are two types of prices. There's nominal price, which is the actual value of the share from the company. Now, when these shares go at what is called a stock exchange, at stock exchange, if, for example, you buy these shares, then you can sell them. You're allowed to sell them. So you can sell these shares at whatever price you want. Okay? So the price at which that share is traded at the market or at the stock exchange is called market price. Okay, so the company, the price that share is bought from the company, or the company advertises that share, it's the nominal price. Then the price that it is going at the market is called market price. Okay, so that's how it works. You can buy a share from the company, then you can resell that share. Okay, now the people buy shares. There are two types. Okay, they are called shareholders. Okay, the people buy shares. If you buy a share, then you are a shareholder. Now there are two types of shareholders. They are what are called ordinary shareholders. So I'll be using SH to represent shareholders. So they are ordinary shareholders. Then we also have what are called preferential shareholders. Okay, so ordinary shareholders, they have what are called ordinary shares. Then preferential shareholders, they have preferential shares. So what's the difference between these two? For us to understand this, let me introduce another term called dividend. So dividend is the money, if you have bought shares in the company, the money you're going to get from the profit that the company has made. That's called a dividend. So dividend is the amount of money paid to shareholders by the company from the profit the company makes. Okay, so if the company, the business has been good, it makes profit, part of that profit, it's going to be paid to the shareholders. Okay, So that the name of the profit is called dividend. So dividend is just what the shareholder gets from the profit. Okay. Now we go back to the shareholders. Okay. So the ordinary shareholders, these ones, when the company makes, let's say the company makes a profit of 200 kwacha. Okay. So this profit, it will first be given to the preferential shareholders. Okay, a part of it is going to be given to the preferential shareholders. It's not always that all the shareholders are going to be paid, depending on the profit. Okay, but whatever profit has been made, the first who are going to be paid are the preferential shareholders. If there's a portion of the profit that remains, that is going to be paid to the ordinary shareholders. Okay, so that's how it works. Okay, once the profit is made, the first who are going to be considered are the preferential shareholders. Then the second are ordinary shareholders. Of course, these two have got different rights, which I won't go into it. For now, in mathematics, just know that the preferential shareholders are paid first, then the second ones are the ordinary shareholders. Okay, so that's how companies work. So let's try out some questions. Let me check if you're able to see everything clearly. You are. Okay. So here's the scenario. Okay. So examples. So question 1, let's say we have Mr. Tembo. Mr. Tembo buys a share, or let me say buys 200 here, right? Shares whose nominal value is 20 kwacha and market value is 50 kwacha. How much does he pay for the shares? Okay, question B. How much does he sell all the shares? C. How much profit does he make? I hope my handwriting is readable. I was supposed to be a medical doctor. I'm sure you can see. Okay, let me just do this a bit. Okay. This is better. Okay. So, solutions. So, Mr. Tembo buys 200 shares, right? Then the nominal value of these shares is 20 kwacha, but the market value is 50 kwacha. So, here, maybe my English is not phrased well, but he's buying it from a company. Okay? So, how much does he pay? So, what value are we going to use? Are we going to use the nominal value or the market value? Okay, so when you're buying from a company, when you buy shares, we use the nominal value. Okay, so since he has bought 200 shares, therefore the amount he pays is the 20 kwacha, which is the nominal value, times the 200, which is the number of shares. Okay, so this is star for paper 1. Okay, so 2 times 2 is going to be 4,000. So it pays 4,000 for all the shares. Okay. Question B. How much does he sell all the shares? Now the market value for these shares is 50 kwacha. So how much does he sell how much does he sell all the 200 shares? Okay, so the market value is 50 kwacha times 200. Okay, so 5 times 2, 10, is going to be 10,000. So he sells them at 10,000, all of them. He sells them, it makes 10,000 from the sales. Yeah, my English, I'm not sure if it's clear here, but I wanted to ask how much does he make from selling all the shares? So, since the market value is 50 kwacha, so 50 kwacha times 200 is going to be 10,000. See how much profit does he make? Profit, he bought at 4,000, he sells at 10,000. So profit is 10,000 minus 4,000, which gives us 6,000. So this is the profit he made. Okay, let's look at other questions. Okay, so the second question, we're going to phrase it in this way. Question 2. A company pays 20,000 kwacha to 100 shares. Or should I say, yeah, 200 shares, okay? Or 400 shares. English. A company pays 20,000 kwacha for 100 shares. So a company wants to pay out 400 shares, sorry, 100 shares, so they end up paying 20,000, okay? So what is the cost per share? So this 20,000 comes from the profit that the company makes, okay? What is the cost per share? B, Mr. Jeff has 10 shares. How much dividend does he receive? Okay, the reason why I don't like teaching like this is because you have to watch me write, you know. That's why I like the other way, the presentations where questions are typed and all. See, so in short, it takes time. But if you like it, tell me in the comment section. Tell me if you like this version or the other version of delivery or both. See, or if you want, I can be using a board, a whiteboard, of course. See, Mr. Jeff has 10 shares. How much dividend does he receive? Okay, what other question can we make from here? I think this is enough. So here I'll change the English. I'll say what is the nominal price for each share. The meaning is the same, okay? The meaning is the same. So I just wanted you to see both types of questions. What is the cost per share? What is the nominal price for each share? Meaning that these people bought shares, how much did they pay to get the shares, which also means cost per share. Okay? So solution. Okay. So A, what is the nominal price per share? So 20,000 is paid for 100 shares. Okay, so we're going to use a proportionality, the concept of proportionality, okay, which says if 20,000 is paid for 100 shares, one share is how much? Okay, so we do cross multiply. X times 100 is going to be 100x. 1 times 20,000 is going to be 20,000 divided by 100 divided by 100. So this and this will cancel. So your x is going to be 20,000 divided by 100. It's 200 kwacha. So this is the nominal price per share. 200 kwacha is the nominal price per share. Okay. Mr. Jeff has 10 shares. How much dividend does he receive? So he has 10 shares. Okay. So there are two ways you can do this. Okay. You can use proportionality. You can say 20,000 shares, it's 100. Right? What about 10 shares? It's going to be how much? Okay. Or since one share is 200, you can multiply this 200 by 10. Okay. So it's simple proportionality. Okay, so B, let me see if you can see clearly. No, you can't. Okay, B. So we can say 20,000 is for 100 shares, right? Is it? Yes. What about 10 shares? It's how much? Of course, multiply. 100 times x is going to be 100x. 20,000 times 10 is going to be 200,000. We can divide both sides by 100, divide both sides by 100. This and this will cancel. X is going to be 0, 0, 0, 0 cancel. We're going to remain with 2,000. Or one share is 200 kwacha. So 10 shares equals this 200 kwacha multiplied by 10, which is going to be 2,000. It's done. Okay, I think these are all types of questions that can come. So next we look at the concept of simple interest. Okay. I'm trying to keep time, that's why I've gone into cursive writing or kwala as it were. Okay, so sometimes you can invest your money in a business, then you'll be paid what is called simple interest. So in case, for example, you invest 100 kwacha, they can say you'll be given 10% interest in the next 1 year. Okay, so in short, if 1 year passes, you'll be given 10% of the money you invested, meaning that the total money is going to be the money invested plus the profit. Okay, the profit is 10% of this. So now this money you put is called a principal. The percentage is called the interest rate, and the amount of time is called time, which is usually measured in years. Okay, so the formula for simple interest, the formula that allows you to calculate how much money you're going to make depending on the interest and the amount of time it takes you have kept that money or you have invested that money, is simple interest is equal to principal times rate times time over 100. Okay, that's the formula. So here's the question. Mr. Boyd invested Mr. Boyd invested 100,000, which is to have an interest rate of 10% for 5 years. Find the interest he gets at the end of 5 years. B, find the total money or calculate the total money he will get. Solution. Okay. Solution. So A, find the interest he gets at the end of 5 years. So you just have to use this formula. So you just say interest is equal to principal rate time over 100. Okay, so you're going to say interest is equal to, what's the principal? The money invested, 100,000, times rate. What is the rate? 10, times time. What's time? 5. Okay, over 100. So this and this, you can do this. Okay, so you're going to have 1,000 times 10, 10,000, 10,000 times 5, 50,000. So he's going to make 50,000. So this 50,000 is the interest. The money is going to be added to his money. And the question was saying, find the interest. So this is the interest. Question B wants the total. So the total amount of money is principal plus interest. That's the total amount of money. So I'll do it from this side. So total is equal to principal plus interest. So the principal is, how much did he put initially? It was 100,000. Plus the interest, which is 50,000, right? Let me just verify the figures. Yeah. So the total will be 150,000. Okay? It's like Chilimba. You put Chilimba. Does Chilimba make interest? No, maybe village banking. Yeah, so you put some money, then after some time, that money is going to increase because it will have an interest. Okay, so this is basically done. The rest, you can figure it out. They are simple things, okay? But anyway, let me just take you through the last part. So other things involve simple arithmetics like percentage profit, how to calculate percentage profit, and the likes, percentage loss and the likes. So these are just simple things which are not standard, which you can figure out even with, in short, there are no standard formulas, okay? You just need to know, okay? So percentage profit. But of course, we're going to make formulas together, okay? So if you buy a phone at 1,000, then you go to the village, you sell it at 1.5. How much profit have you made? Okay, so this is called the cost price, the amount you have bought it at. Then the amount you sell it is called the selling price, right? Okay, so now the profit is sale price minus cost price, which in this case sale price is 1,500, cost price is 1,000, which if we subtract we get 500. So this is the profit, okay? Then what is the percentage profit? Percentage profit. So percentage profit is just the profit expressed as a percentage, okay? So in short, it means percentage profit is profit over cost, okay? Profit over cost. Profit you've made over the amount you bought it at, because percentage profit, we use it to compare with the actual money we bought something at, okay? So that we see if what we did was worth doing, or if it makes sense. Then you do times 100%. Okay, so profit, what's the profit? 500 over cost. Cost, it's 1000 times 100%. So you do this, the two zeros cancel, this zero cancels with this. Okay, so you will just remain with 50%. Okay, another scenario, Mr. Manjata bought a sofa. Okay, so cost price of this sofa is, so Mr. Manjata bought a sofa, the cost is 15 kwacha. Then he later decided, after using it, he decided to sell it at 7.5 kwacha. Okay, question A, how much loss did he make? Okay, so loss, okay, so loss is cost price minus sale price. So the formula for loss and profit, they are the same. If you look for the if you look at the formula for profit, it's sale minus cost, but for loss it's cost minus sale. So it's the same, but they are just interchanged. Sale minus cost, cost minus sale. So in this case, what is the cost? 15 kwacha. What is the loss? 7.5 kwacha. So 15 minus 7.5, it's 7.5 kwacha. Okay, that is the loss. Next question, find the percentage loss. So percentage loss is equal to loss over cost. Okay, just like percentage profit is profit over cost, percentage loss is loss over cost times 100%. So the loss was 7.5, the cost was 15 times 100%. Okay, so now start mathematics. Okay, I'll do it simple. So I'll do 7.5 times 100. Okay, that's a simple way to do this. Or you can do 5 here, 5 here. Okay, what has happened to my right? Okay, just a minute. Okay, so yeah, you can do 7.5 times 100. So 7.5 times 100, when you're multiplying with a number that has 0, you just have to move your point this direction. You look at the number of zeros, there are 2, so you move it 2 times. Okay, of course if there is a 1 in front, so you just do 1 times 7.5, then the zeros, you move this point this side 2 times. So 7.5 times 100, you move like this. Then you rewrite, the point will be here. Then you rewrite 750, your point is here. So you can forget about the point, because any number that has no point has a point at the end. So it's 750 over 15. Okay, so now you can do 15 into 75, it's 5, right? 15 into 0, it's 0. So 50%. Okay, this marks the end of this topic. See you in the next lesson.